business owners. If you're working hard to grow your business but you still feel stuck or constantly playing financial catch up, then this video is for you. I'm Antonia, a small business owner and an accountant. I run Abacus Jack with my business partner Andy, and our mission is to help small business owners get more financially confident so that they can build better businesses. As an accountant, I deal with lots of small businesses and see lots of different niggles that can be improved and fixed. And today I'm breaking down 5 common financial mistakes that I see all of the time. More importantly, how you can fix them. Let's get into it. 1. Not knowing your numbers. I get it. You're busy running the show. You judge the success of your business by looking at the bank account. And I mean, it's tempting, isn't it? You've got your phone, app's right there. Has my invoice receipt been paid? Yes, I've got money in the bank. Great. But if you don't know your profit or your cash flow or even your break-even point, then you're flying blind. You might be profitable on paper but cash poor, or you're underpricing your services and don't even realize it. Or you're not planning your upcoming obligations, so you're missing future payments or tax payments, or burying yourself in a future tax hole. To fix it, review your financial reports once a month. That's your profit and loss report, your balance sheet, and your cash flow report. If you're using a bookkeeping system, you can find all of those reports there. If you're not sure how to read them, then ask for help. That's what accountants are for. Secondly, this one is one of the worst ones, which is mixing personal and business cards. As an accountant, this is like a plate of spaghetti trying to untangle which transactions were meant to go out of which account, and it just is a horrible experience for all involved. This is caused by forgetting your personal card or having poor personal cash availability, so then buying groceries on the business card, or forgetting your personal card and having to pay with your business card at the petrol station. You just shouldn't do this. It confuses your records, it increases your accountancy costs because of the extra time spent trying to reconcile what were business expenses and what were not. And also, do you really want your accountant looking into your personal bank account at your personal expenses? And that's before we've talked about going back to point 1 of how can you see how your business is really doing if you are not capturing all of the expenses that are relevant to the business on a monthly basis. To fix it, it's quite simple. Just open a business bank account and be strict with, am I buying this for the business and use the business card? Is this personal? I use the personal account card. It'll make your life easier, it'll make your business more legit, and it'll keep your accountant happy. Number 3, not saving for tax. Everybody has to pay tax, even if you've watched one of those reels where you can get £60,000 out of your business and not pay any tax. Not true. Not into your take-home pay so that you've got £60,000 to spend in a year. Not going to happen. So imagine you have a great month. You know, if you're an accountant and it's January and there's 3 million tax returns that are late and they've got to be submitted, and you have high invoices in the bank account that are paid in January, February time, you think, great, we've got some cash. Then what would happen if all of that money was then spent? You know, some of that is going to go to the tax man, whether you're a self-employed person or if you're a limited company. Some of that is going to go on tax. So you can't spend all of it. And at some point, a tax bill is going to land. And if you haven't skimmed any of that money off for tax expenses, then that's not going to feel very good. So what you should do is each month, look at your profit using your P&L report, your profit and loss report. Based on the profit level for that month, take 20% of that number, or 20 to 30%, depending on how big that number is, and skim that into a savings account. Or if you have a digital account where there's a little saving space, then add it into that saving space. It takes 2 seconds. You can do it at the end of the month or the beginning of the next month. And then that just means that you're safe and you're planning for the future, and your future self will thank you. Number 4 is trying to DIY everything. As a small business owner, I understand we have to wear different hats. For example, I'm not a videographer, I'm an accountant. I'm not a TV presenter, I'm an accountant. So talking on video is not necessarily the most natural thing that I do. With practice, I can get better at it, but I'm never going to be as good as someone else who can do that. Similar things are true for other business owners who have different types of roles. So, for example, hairdressers are excellent at making hair look amazing. And to make hair look amazing, they have to be very skilled in what types of dye to use, what colours work with different skin tones, how to cut different types of hair, what tools to use with different types of hair. Now, if you work in a creative industry, that's quite different to working in a financial industry. And if you are trying to act as a financial advisor and a bookkeeper and a tax advisor, but your day job is a hairdresser, number 1 is you're going to be really tired at the end of the day. Number 2 is it's quite hard to do stuff away from your natural skill set that you're trained in. Number 3 is it leads to errors, and you could be missing major deductions or opportunities to grow. So fix it by building your network. Outsource when you can and work with professionals. An accountant isn't just a tax person. We are your growth partner. And finally, number 5, the amount of times I've talked to someone and they have expressed the success of their business based on how high their turnover is. So the turnover is your sales, your income. If that's high, that's great, but that's only one part of the story. If your turnover is high and your expenses are higher, then actually you're not making any money. So when you look at sales, that can be one piece of the picture that you track, and that's one of your targets for running the business. But you also need to look at profitability, because revenue is sexy, I get it, but profit is what pays the bills. And more sales doesn't always mean more money, because that's where margins come in, right? If you discount your products to increase sales, then you could be messing up your margins, and actually you're making a smaller margin, or you're making no profit at all. If you're reducing the margins, then you're going to have to increase the level of units that you sell, and that's because if you're making £2 profit on something that's discounted, you're going to need to sell 10 of those to make £20 profit, compared to if you're making normally £5 profit on something, then you only need to sell 4 of those to make £20 profit. So be careful, because you could end up working harder but earning less. There's a few things you can work on in this area. Firstly, track your net profit margin. This is the number. So you have your sales, then you minus your direct costs, which are your cost of sales, and then you minus all of your administration expenses, which might be things like subcontractors, advertising costs, employee wages, office costs, all of those administration expenses. And then at the bottom of that, you have your net profit. So your net profit margin could be if you sold 2,000 units and you made £1,000 net profit, then you've made 50p profit per item that you sold. And if that's not high enough, then you can review pricing strategies and cut expenses that aren't having an impact on your business. So sometimes if you're having to spend a lot on like Facebook ads and Google ads, and these aren't generating the types of sales that you expected or the type of customers that you want, then don't be afraid to reduce the spending on those and look at different marketing opportunities. The overall goal of business is to generate wealth for shareholders. The goal is to make more, not just sell more. Okay, so that's it for today. That's 5 financial mistakes that could be holding your business back. Which one hit home for you? Drop a comment and let me know, or ask your questions. I read every one. If you found this helpful, please give me a thumbs up on the video. I'd appreciate it if you would subscribe to the channel for more small business tips and advice. And if you found it useful and you have a friend who's a small business owner, then share it with them. Thanks so much for your time today. I really appreciate that you're busy and that you chose to listen to me today. If you want to become a client or you want to speak to me directly, I've linked my contact details to the video. I hope you have a great day and see you next time.